Happy New Year, everyone. The stock market made an important move this past week. It may signal an end to the stock market crash. Where are the opportunities? Well, I will show you some things to look at. Plus, I'll do my analysis of the overall market, see how all of these different markets connected with one another this past week on the news that came out on Friday, which moved the market. And then finally, we'll look at the day trade of the week on MEGL. Well, welcome back. Happy 2023. On Friday, we had an important move in the market. I'm going to get into that later in the video. But first, I want to talk about whether the market is in fact bottoming and likely to move higher. Now, I will elaborate on that point in a moment, but I am seeing some sectors that are starting to lead the way. Whether the overall market is there, well, that's a question that we still have to answer. And again, I'll go through the thinking on that in just a moment. But I have noticed that some sectors of the market are starting to turn ahead of the overall market. And so I want to look at some of those charts with you, and we'll talk about what looks good in those charts, what still needs to improve, and that sort of thing. So the first one I want to look at this week is the chart of the biotech sector. Symbol there is IBB, and you can view that on my website, Stockscores.com, by simply typing in IBB. And here we have the chart, the 3-year weekly chart. And there's some good things happening here because the downward trend line was actually broken some time ago. But that downward trend line that was broken here did so after hitting a new low. And it's much more reliable if a downward trend line is broken after the build of a rising bottom. And so we had that happen a couple of months ago. And then the last, say, 4 weeks, we went into the year end and the tax loss selling that comes with year end, we saw a little bit of a pullback. But this past week, we started to move up again, and we may be breaking what I call a flag pattern, or what's called a flag pattern. And so that's a positive sign for the biotech sector. Now let's jump back and take a look at semiconductors. The symbol there is SOXX. There's a leveraged version of this, which is SOXL. And let's also make this a 3-year weekly chart. And there you can also see that this sector has broken its downward trend line, and it started to move up this week from a rising bottom. Now, I would like to see it get up through this resistance at 380. And so I wouldn't get too optimistic about semiconductors until it can break through that 380, 385 level from the rising bottom that's built. That would be a positive. That could happen next week. It may not happen for months, just something to watch for. All right, next chart we're going to look at is the home builders sector. Now, of course, home builders is very sensitive to interest rates. We're going to talk about interest rates in just a moment and why I think we may be seeing a turn in that market. But on the home builder sector, this past week, you see this break higher. And again, I'll show you a very good reason why that happened in just a moment. Here is the little short-term downward trend line. Here's the build of the rising bottom. You could also draw a downward trend line like this, which was broken here. So we're starting to see this sector move, and that is an indication of what the market thinks about the future direction of interest rates, at least partially, or perhaps there being a shortage of homes and people are just going to have to start buying houses again after maybe this past year pulling back from that as interest rates were rising. All right, next chart we're going to look at is the gold miners. So that symbol, there's many different sectors, but we'll use GDX. And here, again, 3-year weekly chart. Now, gold has been moving up for a few months, and the miners, I would say, have sort of lagged a little bit, but this week they broke higher from a little rising bottom. So this sector has been strong the last 2 months. I think it's likely to continue and move up into this resistance zone, which is still a decent amount of upside. Finally, let's take a look at China. FXI is the symbol for the large cap ETF on China. And what's important this week is the downward trend line was broken. You can see that there. Kind of a rising bottom, not the strongest one. So I'm going to give that like a 6 out of 10 in terms of the pattern. But those are some areas of the market that are starting to improve. Now the cautionary note. The market itself, the overall market, is still fighting the bearish sentiment. We haven't recovered just yet. So let's now jump into my normal weekly market analysis and figure out what happened this week. And we'll start with a chart of the S&P 500. And then I'm going to show you how all these different sectors connect to one another through the move that happened on Friday with the bond market and interest rates. So let's start with the SPY, and we'll make this a 3-year weekly chart to begin. And you can see there was a little slight uptick in the market this past week. Nothing that major. The downward trend line is still intact. We have a head and shoulders bottom building. If the S&P can break up through that downward trend line, then that would be a bullish or an optimistic signal. Hasn't happened yet, but it could happen next week, so keep an eye on that. The stock scores still in that neutral territory. Let's take a look at the short-term chart of the S&P, and there you can see that the market was kind of locked in this trading range going into the end of the year, and now it's starting to break out of that. So we're getting a short-term signal that that market is turning. Now, let's explain why the market had some good strength on Friday. So there's two important numbers that came out. The first was the jobs number, and the second was the PMI, the Purchasing Managers Index. Both of those numbers, not so much the jobs number, because the jobs number was a little better than expected, but the PMI number showed an economic slowdown. Now you would say, well, that's bad news. It is bad news, but it's also news that will perhaps motivate the US Federal Reserve to stop raising interest rates so aggressively. And so the idea and the reason why the market went up on Friday is because the expectation is that there will be less raise in rates than has already been priced into the market. All right, so now let's take a look at something that gives us an index, or an indication rather, of what interest rates are doing. This is TBT. Now this is a inverse exchange traded fund on the bond market. And I use this because it's a good way to picture interest rates. If this is going down, interest rates are going down. Really what this means, if this is going down, the bond market is going up. If the bond market is going up, that means interest rates are coming down, all right? So here you see that this past week, we had a downward move on TBT, meaning we had a downward move on interest rates. Now I wanna be clear, this is interest rates driven by the bond market for US Treasuries. It's not what the Fed does. The Fed motivates this a little bit, but this tends to be it leads what the Fed does. It prices in what it thinks the Fed, the US Fed, will do on interest rates in the future. So it's a better example of what the interest rates actually are out in the bond market. And we can see it move down. Now, let's take a look at the 3-year weekly chart. I'm going to draw a line across the bottoms here, and there you can see the upward trend in interest rates. Now, when price runs away from the trend, it usually comes back. It ran away, which meant interest rates went up very dramatically in the bond market, and it came back. And that's typical. And it bounced off of the trend line twice. But this time, the bounce is not hitting a new high, at least not so far. We had that strong move down this past week, and that threatens to break the upward trend line from a falling top. And if that happens, that is a good indication that while interest rates may not go down a lot, they're probably going to stop going up. Essentially what the market is saying is it sees a recession coming, it sees economic weakness in the marketplace, and that's going to motivate the US Fed and perhaps other central banks around the world to stop raising interest rates so aggressively. Now maybe there'll be a couple more, but those have already been priced in. The market may have priced in too many, which is why we now see the market pulling back. All right, so interest rates dropped. Now let's see how that carries through to other markets. If interest rates drop, that tends to affect the US dollar. So we can go look at UUP, which is an indication of the US dollar, and you can see on Friday it had a strong downward move. If we look at the 3-year weekly chart, you can see that the upward trend line is right here, and we're almost back to that. You can also see that the more steep upward trend line was broken a couple of months ago. We're coming back, and that is taking the US dollar back, and that helps a lot of those global economies, and particularly commodity prices, because most commodities are priced in US dollars. So we would expect then that if this is going down, that something like gold should be going up, because gold is priced in US dollars. GLD, I mean, it's priced in other currencies as well, but that's the primary one. Here is GLD, and you can see exactly that. Gold has been moving up. So that is a Another indication that US dollar weakening because expectation for interest rates not going up so much is in place. Now gold is coming into this trading range here. I expect it'll come up a little bit more and then get stuck, just like I expect the US dollar will come down a little bit more and then get stuck. Now another important commodity, of course, is oil. And this is where it maybe starts to be a bit confusing. If I pull up the chart for oil, despite the fact that the US dollar went down this week, we also see that oil went down. Well, if oil is priced in US dollars, shouldn't it be more attractive now that the US dollar has dropped? In some ways, yes. However, the reason the US dollar is going down is because the expectation is the global economy is slowing down. And what do you think that means for oil consumption? If the global economy is slowing, less demand for oil, and that's one of the reasons why we see oil coming down while gold is going up. That inverse relationship there doesn't always make a lot of sense, and it doesn't always work that way, but in this case, that's what's going on. Now then, when interest rates drop, that tends to favor smaller cap stocks in particular because they have more sensitivity to interest rates. Investor psychology, and largely retail investor psychology, benefits from lower rates because it just creates more optimism. And so that's one of the reasons why the biotech sector is doing better. Because who tends to buy biotech? It's very speculative. Biotech stocks are, hit or miss on whether they have a new drug. And so people tend to gamble on those kinds of stocks. And you're starting to see that money come back into the biotech sector among other small cap sectors because that retail investors may be starting to calm down a little bit, not so concerned about the rising rates because they've kind of stopped going up so much. All right. Now the final chart, a couple charts we'll look at. First, let's take a look at the Canadian stock market. And what you will see here is that the Canadian market looks better than the S&P does. It's already broken its downward trend line. It's starting to move up from a rising bottom. So my rating here is going to be a little better because the chart's better. But why is that? Well, the Canadian market has a much heavier concentration of commodity stocks. Commodity stocks benefit from a lower US dollar. So things like gold and silver, but also uranium and nickel and those sorts of things. And then the oil market, even though oil prices have slid lower over the last 6 months or so, it's still quite high. These oil companies are making good money again, whereas, during COVID, they were abysmal. You were almost having to give away oil. And that's changed dramatically. So those oil stocks are doing better. The mining stocks are doing better. And then that flows through to the Canadian banking stocks doing better because so much of the economy is based on commodities. So that's one of the reasons why the Canadian market looks better. Now, I know a lot of you like to play crypto. A lot of money was made there. Certainly that party has been over for over a year. But let's take a look at GBTC, which is a vehicle that many people will use as a proxy for Bitcoin. And here you can see that Bitcoin in the short term, the last month, has started to move up, say, in the last week and a half. It is a minor move in the grand scheme of things because when you look at that 3-year chart, it is still ugly. I do think that in the short term, it's trying to stabilize, but I would not encourage anyone from a longer term standpoint anyway, to go out and buy these. Now, someone who day trades, if you can day trade Bitcoin or through some of these exchange traded funds that represent cryptocurrency, there may be an opportunity on the long side to be in and out within hours or days. But for the long-term investor, I don't yet think it's time to be buying these things. All right, so let's get into my ratings then. US stocks, I remain long-term bearish, but have raised my short-term rating to neutral. Canadian stocks neutral on both time frames, gold bullish on both time frames. Oil long-term neutral because it is at the long-term upward trend, but still bearish in the short term. US dollar long-term neutral, short-term bearish. Bitcoin long-term bearish, short-term neutral. And interest rates short-term bearish because we've had that pullback, but still it is in a longer-term trend and it's come back to the trend line, so I've given it a neutral rating in the long term. All right, now let's take a look at the day trade of the week. Day trading action really picked up this week. I noticed a big improvement from going into the end of the year last year. It's not a big surprise. There are a lot of people leave the market alone when the holiday season comes. But we saw a lot of good moves in stocks this past week. I don't think it's a great market yet, but it definitely is making a step towards improving. And I think we are going to continue to see that happen as we go into earnings season, which starts kind of next week. So this particular trade is a stock that was abnormal on Thursday and also Friday. And I always love to trade abnormal stocks because they're the ones that are catching the attention of the crowd. And so this particular stock had very strong volume, and it gave an action candle, which is my indicator, which is useful for breaks of pullbacks. It gave an action candle right there. This one's a little bit better because the pattern here is something called a pennant pattern. And so you had a breakout from a pennant there at roughly 275 or so. And within the course of, I don't know, half an hour, it moved up probably 3, 4, 5 times risk. And so for a quick trade, in and out, probably for 3 times risk. So if you risk 1,000, make 3,000. You risk 100, make 300. And the capital required to make those trades wasn't a lot. So the percentage gain on a trade like that is very good. And these kinds of trades where you can be nimble, zipping in and out of some of these actively traded stocks, are things that we focus on in Active Live, which is my service at Stockscores, where you can sort of watch my analysis screen through the trading day, hear my comments and that sort of thing. So if you want to learn more about that, go to the Stockscores website. All right, now I want to add one other sort of invitation for all of you before we finish up this week. And that is, I know a lot of you always have questions and post them. And I thought something useful would be to have me answer some of those questions in a video. Because so much of what I do is chart-based and requires a visual explanation. If you have any questions about the markets in general, about trading in general, trading tactics, that sort of thing, individual stock questions, maybe you're long Microsoft and you're suffering, is it, you want my analysis on that? So post your question in the comments and I will pull a few of those out. I probably won't answer all of them because I expect there will be a lot, but post a few, I'll pull out some of the interesting ones and I'll make a video in the next week where I answer some of those questions, and watch for that. I hope that you've enjoyed this week's video. It's the first of the new year. I'm trying to do a little bit more in-depth analysis of the markets for you. Every week it's theirs, it's free, so why not subscribe? Make sure you click on the notifications bell so you get updated when I put up a new video. I'm going to try to put up a few extra in 2023. Hope that you've enjoyed this week's video. If so, click on the like button, and most importantly, as always, trade well.